Shopify just hit an all-time high of $182.19. The stock's up 123% in the last year. But can this rally keep going, or are we seeing the top? Because I'm still bullish, but I'm not blind, right? The numbers, they look strong, but the risk profile is tightening, and they're about to release their earnings. Now, Shopify isn't just an e-commerce platform anymore. It's becoming an AI commerce engine. It powers millions of online businesses everywhere worldwide. Now, they have rolled out AI agents, instant store builders, and even a ChatGPT integration that lets merchants sell directly inside conversations. And that's massive because it's not just software anymore, it's a full ecosystem. But here's where I think most people are missing, right? This AI integration doesn't just expand Shopify's reach, it makes the platform harder to leave. And that's what's driving the real value here. Stickiness, not hype. In this breakdown, I'm going to show you exactly where the upside is, what could slow it down, and the one metric that could tell us whether this run still has legs. Hey, what's up? My name is Rick Orford. I've been trading since 1999, and I am not a financial advisor. That's a good thing. I break down the numbers so retail investors like us can make smarter, more confident decisions with our money.
I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/Ricko to get your 10 stock picks right now.
With all that out of the way, let's dig in. Shopify isn't just another e-commerce platform. It's the engine powering millions of online businesses worldwide. And the company's mission is clear: to make commerce better for everyone. Whether it's selling through an online store, a retail shop, social media, or any other marketplace, Shopify helps businesses reach customers wherever they are. And everything is managed in one place, so merchants can easily track sales, products, and customers without any headaches. Now, behind the scenes, Shopify's tech handles all the tough stuff, right? Like inventory, payments, marketing, and even customer data. That way, businesses can spend more time growing and creating instead of worrying about operations. Now, with a foundation built on simplicity, reliability, and continuous innovation, Shopify isn't just keeping up with the digital economy, they're shaping it. And that's the scale of transformation where the real story starts to begin. Shopify's got a strong ecosystem around its platform that includes app developers, theme designers, marketers, service providers, and affiliates who all help expand what the Shopify experience can offer. And this network not only improves the platform, but also fuels its growth. Each new app, theme, or integration, all of that adds more tools that help merchants sell more effectively and scale their businesses faster. At the end of 2024, the Shopify App Store had over 16,000 apps. And that just goes to show how deep and active the ecosystem has grown. So I think you could say that Shopify's success isn't just about what they build, it's about what they enable. And that ecosystem might be their biggest competitive moat. Now, let's look at the stock price because that's probably why you're here, right? Shopify stock recently closed at around $179 after recording an all-time high of $182.19 on October 29th. Year to date, the stock is up 68%, and in the last 52 weeks, it's up 123%. That's a monster run. But can it keep climbing from here? I mean, with Shopify stock reaching all-time highs, investors are naturally asking what could drive or slow down this future performance. And it's something that's come up in my Discord. So let's break it down. Well, Shopify has been rolling out advanced AI tools designed to improve the merchant experience and make the platform even more essential in the daily operations. In the summer 2025 edition, they launched AI shopping agents, a store builder that creates and designs from keywords, and an upgraded sidekick assistant that automates tasks like customer targeting, reporting, and image generation. And they reinforce this strategy through both acquisition and product rollout. In March 2025, they acquired Vantage Discovery, a startup specializing in AI powered retail search, enabling generative AI driven search results across their entire merchant base. Then, in May, they launched the AI Store Builder, which lets merchants input descriptive keywords and instantly get 3 full store layouts with images and copy all ready to launch. And this innovation drastically reduces the time to launch and lowers merchant setup costs. Also, Shopify gained a major boost from its new integration with OpenAI's ChatGPT. This was a move that could significantly expand its reach and strengthen its position in AI-driven e-commerce. And this is a big one. Shopify's partnership with OpenAI lets merchants connect with ChatGPT-powered shopping, bringing in millions of new users who want seamless e-commerce experiences. That means higher sales conversions, broader reach, and deeper customer data. And more importantly, this integration makes Shopify's ecosystem stickier than ever. Merchants, they get smarter, automated ways to reach customers, and that makes leaving Shopify that much harder. So the short-term win here is growth. And the long-term win, it's retention. And that's where the value compounds for shareholders. Shopify may be one of the strongest players in e-commerce, but like any fast-growing company, it's not immune to risks. Management has identified several key risk categories that could impact long-term goals, financial performance, and overall growth momentum. Shopify's growth depends on keeping merchants happy, scaling efficiently, and retaining top talent. They also rely on third-party partners for key services like cloud hosting and payments. And expanding into new markets brings more competition and regulation. And any software or system issue could disrupt operations. And like most tech firms, Shopify faces threats from hackers and data breaches every second of every day. And then there's the fact that e-commerce is a competitive battlefield. Economic slowdowns, trade issues, and seasonal trends can all hit sales while AI and tech evolve fast, meaning Shopify has got to stay ahead or risk being left behind. And lastly, operating globally means changing laws or facing changing laws on privacy, competition, and taxes, all of which can raise costs or create new legal challenges. And I'm going to be looking for all of this in their third quarter report that's due out shortly. So with all that out of the way, is Shopify stock a buy right now? Well, to answer that, let's see what Wall Street thinks. A consensus among 47 analysts rate Shopify stock a moderate buy with a high target price of $200. That suggests as much as 12% potential upside from the stock's latest close. The average score has ticked up to 4.11 over the last 2 months. Their expanding AI ecosystem, including the ChatGPT integration, as well as new store building tools, strengthens platform stickiness and positions the company for continued momentum. However, Shopify has to also carefully navigate the risks that come with rapid growth. And remember, Shopify has never paid a dividend and doesn't plan to anytime soon. That does support expansion, but it also means that investors are going to be relying solely on capital appreciation for returns. So, can Shopify keep this momentum, or is it running too hot to handle? Let me know what you think in the comments below. And while you're there, if you found this video helpful, do hit those like and subscribe buttons because it'll help others find the video. It supports the channel, and it makes sure you never miss out on any of my future deep dives. Well, folks, that's it for me today in this video. I wanted to thank you so much for watching, and I'll see you next time.